Hi everyone, my name is Eric and today I'm going to be giving you an overview of my $110,000 Wealthsimple trade portfolio. My portfolio is spread across three accounts, which is my TFSA, RRSP, and non-registered accounts. Both my TFSA and RRSP are now maxed, and that's why I've been investing inside of my non-registered account, which has quickly become my largest account with a balance of over $50,000 now. Let's go into the holdings of my three accounts here. So this is my spreadsheet within Google Sheets that I use to track my investments. It has a lot of automation in place, such as using Google Finance operators for getting the current price of each of my ETFs or funds, displaying a 90-day chart of the historical prices, and I actually extract distributions or dividends from dividendhistory.org and extract it from the HTML and inject it inside of this spreadsheet here. So I don't actually have to update any of these rows manually, which is kind of nice. So just giving you a bit of an overview of how this spreadsheet works. The first column here is just the investment name. The second one is the symbol it trades on the TSX with. My principal, which is just the number of shares I have multiplied by the book price. The current value, which is the same thing, the shares, but instead multiplied by the current price. The gain or loss, so that's just comparing the current value to the principal in terms of a dollar amount as well as a percentage. And the percentage column is actually highlighted so I can see which funds are down the most or the least. So it's color coded, darker red for more of a loss, lighter red for less of a loss. The next column is the weight. So that's just based on the current value relative to the total current value of the portfolio. And then my target weight that I've set for that fund. So you can see, for example, for VFV, I've had a target weight of about 40%, and I'm just below that right now. The number of shares that I have, and then the book price that I get, which I can just extract from Wealthsimple. And I do have to update these two columns manually. And then the current price, which is just using the Google Finance operator, it concats the exchange symbol here, so the Toronto Stock Exchange, TSE, colon, and then the symbol from this column here, and then displays it right in this row. And then I have my 90-day chart of the historical price, distributions, and then using the distribution and the book price that I have, I can calculate my book yield. So here I have my book yield for VFV is 1.29%, which is not far off the current yield. So the book yield, some people call it yield on cost, but yeah, I just call it book yield. So you can see, like, if you're down on investment, your book yield is generally going to be lower than the current yield. So like, for example, for H yield, my book yield's about 10.24%, but if you're down on it, you can get a current yield of around 11.67%. So I like to use that in my investing decisions to see if, where can I increase my yield in general. The next two columns are just the income on an annual basis and the periodic basis. So for quarterly distributions, that's going to be 4 times a year, and for monthly, that's going to be 12 times a year. So the period income, that's just the income given on the period in which the fund gives out its distributions. So for VFV, that's going to be quarterly, and then for VDY, that's going to be monthly. All right, so let's go into the funds one by one. So my first fund here is VFV, which is my largest holding. I've got about almost $40,000 invested into it, and it's a great growth fund. It's not hedged to Canadian dollars, so any fluctuations in the US dollar will affect the price of VFV. And yeah, it's a solid performing fund. I think this is should make up the majority of everyone's portfolio in general, especially if you want to get great US exposure. So there's a bunch of equivalent funds that are pretty much the same as VFV. Like I think ZSP from BMO, and then there's probably a couple of other ones you can get from like BlackRock or whatever. So I mean, you don't have to necessarily go with VFV, but I would just make sure the S&P 500 to somewhere in your portfolio because it's such a great performer historically. Next is VDY, which is just the top high dividend companies within Canada. And I've got about 12,500 invested in it, and it's giving me my monthly income about $46 per month. So yeah, that's I have a target weight of about 15% with that. And then I have my international exposure with the next two funds, VIU and VEE. So I've got about about $10,000 between the two of them. So VIU is developed all cap companies outside of North America. So I've got my North America exposure with VFE and VDY, and so I want to look beyond just North America and get some international exposure. So that's VIU. That's good for getting that, and I've got about 6,300 invested in it. The current yield on it's pretty low because the last distribution was very small. So like this yield is based on the last distribution, so that's why it's so low currently. But generally, this one yields like a lot more, especially VE. Actually, VE had a very tiny distribution in the last quarter of 1 cent per share. Usually, it's much higher than this. So I mean, these period incomes, like that's just based on the last quarter for the quarterly distributions. But you know, so I guess this number for my total income, annual income, is understated decently because of VE. But you know, I like to see these distributions get updated just with what the current distribution is going to be. So that's all fine for me. I just want to be able to see what I'm going to be getting the next quarter. So yeah, so VEE, great emerging fund market index. Yeah, can't complain. I've said about 2.5% because and 7.5% for VIU. So about 10% together for the international exposure. Because while they are great for diversification, geographic diversification, VFV will outperform that like tremendously. Like historically, it's not even comparable. Like VFV has like has done way better. You know, that could change though, but you know, I'm hedging my bets as to, you know, VFE will continue to be outperforming these. So that's why I've have such a much larger percentage in VFE and VDY. Even Canada will outperform these in general, I think, too. So that's why I have a much higher percentage in these. But, you know, we'll see as market conditions change, I can change my target weight and adjust these as needed. So that makes up the growth portion of my portfolio. So these are kind of like, these funds are kind of what would make up an all-in-one ETF such as VEQT, except I like to tailor how much I invest in each of the individual funds. And actually, so this column here for VEQT, this will just be for my FHSA whenever Wealthsimple decides to release it. So yeah, FHSA all-in-one. I'm just going to go straight 100% VEQT in this account. And what's nice about VEQT also is that it has annual distributions. So I don't have to reinvest the dividends inside of it. And I don't get used to the dividends that it provides because it's not providing it every quarter or every month like VDY. So it's just as hands-off as possible. So whenever Wealthsimple releases the FHSA, I'll be just dumping 8K into VEQT, which is basically equivalent to these four funds here, just in an all-in-one. And you'll notice beneath that I have my emergency fund of $10,000 located inside cash, which is just a high interest savings ETF. It gives me about $35 a month. Moving into the passive income portion of my portfolio, I have the Canoe Financial EIT Income Fund. I've got about $4,000 in that. It's giving me about $30 a month. Next is the Harvest Diversified Monthly Income ETF, and I've got about $10,000 invested in this, and I'm getting close to 10,000 in each of these H funds, which includes H Yield, the Hamilton Enhanced U.S. Covered Call ETF, and HDIV, the Hamilton Enhanced Multi-Sector Covered Call ETF. So altogether, these are giving me around $90 each. So it's great. Yeah, it's really enhancing my monthly income every month. And then I have these three split share funds. I don't have that much invested in these. I do not plan to add any more to these unless there's a drastic decrease in um, the market price relative to the net asset value. Because right now these are trading at ridiculous premiums, like GDV. You know, you have to buy it like almost 30% sometimes above at a premium, 30% premium to the NAV, so or net asset value. So, I mean, while these do give me good income, I've only have like, for example, in DFN, 3,500 invested in it. Um, it's giving me $45 a month. That's great and all, but yeah, like I I won't be adding to these unless there's like a significant reduction in the premium relative to the net asset value. So yeah, that's why I have here in the target weight just dashes because I don't plan on adding any to these, any money into these anytime soon. So they're just kind of like sitting there. They give me good income every month, so I'll just leave it at that. Um, and I won't really go over like the risk of split share funds, but yes, these ones, because of the way the split share fund structure works, with the preferred shares acting as the debt, they're almost 100% leveraged. So there is, a lot of volatility with these funds that I'm okay with. That's like I put a small. That's why I have such a small amount in these funds. Like I wouldn't make these a primary position, and yeah, I'm not adding to them as I said. So yeah, that's it for now for the split share funds. Yeah, so then here underneath my all my funds, I have some nice graphs and charts. So here's my monthly yield, and you can see, and actually I can just pull up passive. It's the same graph. I just log like the amount I've got per month. I received in distributions for a given month. Starting at like when I first started investing here, the first quarterly distribution was $148, and slowly I built it up to about $435 with my last monthly distribution. My last quarterly being around 558 because then I'm getting both my monthly and quarterly on the same in the same month, so that's why it's higher on the quarter. Um, and then here's just my projected, uh, monthly and quarterly yields based on if I contribute, $2,500 per month, and the current yield of my portfolio being 5.27%, being 8.37 monthly and 1.16 quarterly. What is it going to look like in the future? So, yeah, by the end of 2023, I should be getting close to, in the mid five, beginning of the $500. So, on the monthly. So that's going to be nice. Well over 600 by the beginning of 2024. So then I have my sector allocations based on the funds that I have here. So I just go on the funds website, and actually I'll just show you that real quickly. If I do view hidden sheets, sector/geographic breakdown. So I just go on the funds website and I get the percentage in each side inside of each sector from the funds website. So here, like BFB is 5.1% energy, and then take my target weight and multiply it by that to get me, and I go through all my funds to get me my total amount in energy, for example. Same thing with the geographic, just Canada, United States, and international. And that's what you see below here for my geographic allocation. Oh, sorry, there is an error here. This should be selecting this column. Sorry about that. Oh, okay. Well, we'll just do that for now. oh wait, no, there we go. It's not displaying okay, there we go. Is it not? Okay, it's not displaying the labels now. There we go. Okay. Okay, so I've got about 21% Canada, 56% in the United States, and 22% international. And then I just have a graph of my fund breakdown, and as well my future principal based on adding $2,500 per month, and reinvesting all of my distributions currently, and then my income breakdown. So relative to my work income, how much is my investment income? So right now it's about 9.38% of my income, or sorry, for April 2023. So last month it was about 9.3% due to that big quarterly distribution. So almost getting close to around 10% of my income is coming from my investments. So that's kind of nice. I just want to keep track of this so that one day I know when I could retire, like, yeah, I want to see this be like pretty much all of it for the month. So yeah, and then there's a tiny sliver for cashback rewards, I believe, and savings interest. So that's just my savings account in Tangerine. They're so minuscule, it barely makes a dent though. So yeah, I do count it in there though. So yeah, in overall my performance, this is the number you see on Blossom. Seeing that I'm down 4.21%, but if you take all of the dividends that I've received and you compare that, that I've reinvested, of course when you reinvest dividends it becomes principal, but so yeah, relative to my principal, I'm down 4.21%. But what I want to look at for my total return is my relative to my net deposits. So my net deposits, just what have I put in versus what is the current value. So and Wealthsimple is just logging out there, but I was gonna show you those net deposits actually. So, but I'll just put them here. Just explain these right now. So the 4150. Sorry, the yeah, 41,500 dollars is my TFSA contribution limit. The $17,904.17, that's my RSP limit. And then the 49,794.88 is by how much I've invested into my non-registered account, which includes the emergency fund and any investments in these funds in my non-registered account. So you can see relative to my net deposits and then the current portfolio value, I'm actually up almost 1%, so that's about $1,000 gain. So yeah, and right now I'm getting about $457 of monthly income, which I should expect for June, and 143 for the quarter. That's based on the previous quarter's distributions. I mean, I expect those to go up a bit, especially for VEE and VIU. So yeah, and then altogether that gives me about $6,000 a year, a bit over 6,000, because I expect those quarterly distributions to increase significantly in the next quarter. But yeah, so that's an overview of my Google Sheets tracking, and I hope you enjoyed and you learned a little bit about how maybe you can take away some things, like the Google Finance operators, the the extraction of dividends from dividend history in order to grab distributions automatically, and hopefully this inspires you to build something similar to track your investments. So thank you guys all for watching, and I'll see you next time.